G'day everyone, Greg Canavan here with the Rum Rebellion market update. This week, not going to talk about the market so much, want to focus on gold. Haven't really addressed the gold market for a good couple of weeks, so want to have a look at a few charts and see how the gold price is traveling. I think more broadly, it's a really interesting time to be looking at gold equities. As you probably know, the Aussie gold market has been very strong the last year, and some of the bigger gold stocks like Northern Star, Evolution Gold, Saracen have put in some very, very good gains, and that's owing to the Aussie dollar gold price at around or over $1,800 an ounce. So there's some really good margins in the Aussie dollar gold price. But funnily enough, the US dollar gold price is still hasn't really got to anywhere near the highs that it made back in 2011, which was up around the $1,900 US mark. But we're seeing a bit of resurgence in the US dollar gold price, and I want to focus on that in this week's update. So let me take you to the first chart, which is the US dollar gold price, and this is just a shorter term chart. The really interesting thing I find with this chart here is that it's moving into a nice upward trend. And what I mean by that is there's a couple of ways that you can define an upward trend, and two of those ways that I tend to look at are both present in this chart. So the gold price bottomed back in August 2018, which was roughly around the highs for the US indices, the S&P 500, the Dow, that sort of stuff, the NASDAQ. So gold put in a bottom there around August, and those green lines that I've marked are sort of consecutive, I guess, lower highs in the market. So each leg up is the gold market's putting in a lower high, which is always good and a good sign of an upward trend. And those moving averages that I refer to each week, they crossed over in December. The other notable thing about this chart is that gold was moving up when the equity markets were selling off quite strongly, which often happens. Gold is a flight to safety trade. But then when the equity markets turned around in late December, early January, and have continued to rally, that hasn't really unsettled the steady rise in the gold price. So I think that says a lot about the change of sentiment towards gold. The market's moving back towards gold, not necessarily as a fear trade, but purely as a relative value trade. Gold has been, I guess, neglected for many years, which is quite apparent in this longer term chart that I'm bringing up now. This is a weekly gold chart since roughly back to 2010. Now, as you can see, from 2011, 2012, gold was topping out and then broke down into a bear market in 2013, and that extended all the way into 2015. Once again, you can see a series of higher lows throughout 2016, 17 and 18, and gold has been slowly working its way higher. I think the thing to look out for the next move is for gold to break above. The line I've put here is around about 1350 an ounce, 1360 an ounce. So if gold can break up above 1360 an ounce on a weekly closing basis, I think that's a really, really bullish move. And should it do that, I'd expect to see gold continue to move above 1400, above 1500, 1600, etc. And throughout 2019, I know it's a big move, but potentially go and challenge those highs that it made back in 2011. Because once it breaks through that resistance there, around about 1360 an ounce, there's really not a lot from a technical perspective stopping gold from moving all the way back to its highs. Now, whether that's going to happen or not, obviously it depends on the fundamental data around that time, whether there's some issues with the US-China trade negotiations that are still ongoing, whether we see an inflationary breakout due to ongoing strong employment in the US, say wages might start to break out. Who knows what will happen? All I'm saying there is that the technical picture, if we get a breakout above 1360, looks very strong. And that will suggest that we're going to see higher prices throughout the remainder of the year. All right, so let's take a look now at some of the gold, stock indices, which are really important. If you see gold stock prices moving, that gives you, or I guess that confirms the bullish stance of the gold price. So let's take a look at some of the charts there. First one I've got is the this is called I guess the Huey index, or the gold bugs index. It's had a terrible last couple of years. It rallied very strongly from the lows in January 2016, but ever since the highs in 2016, it's been trending slowly down. It broke down above that green support back last year and made that low in August, September. And since then, it's been moving steadily higher, which is a good sign. It's recently traded back above that green line, and the moving averages have just started to cross back over. So even though it's very early days for the US gold stocks, it does suggest that we're moving back into an upward trend. They've still got a little bit of work to do before you can get more confident of that, but they're starting to look a lot more healthy than what they did just a few months ago. The longer term chart though still looks a little, I guess, questionable. This is the weekly chart, so on a weekly basis, you've still got those moving averages showing gold is in a downtrend. What you'd like to see is for the gold stocks to break up above those moving averages, and then that would suggest that on a longer term basis, you're seeing gold start to turn around as well, which would be very bullish. Next chart I've got is gold stocks versus the gold price versus the S&P 500. So this is just really gold divided by the S&P 500. And as you can see, gold versus stocks is very cheap at the moment. So I guess what that's saying is, going back to my earlier comments about gold being relatively good value at these levels, relative to stock prices, gold is as cheap as it's been for a long time. Now, if I do gold stocks versus the S&P 500, you can see that the gold stocks are very cheap versus just the regular US, buying the US index around here as well. So there's a lot of reasons to be bullish on gold right now. Not least of those is the relative valuation for the gold stocks versus the S&P 500, which is just the regular index for the US. And also just the fact that gold has been in a bear market for a number of years. It's tried to get out of that bear market and has been taking its time to work its way higher. And as I said, if it breaks above $13.60 an ounce, I think you're going to see a lot of interest come back into the gold sector. That includes the Aussie gold market as well. Even though Aussie gold prices have been very, very strong over the past few years, interest really starts to build when you see the US dollar gold price making big gains. So keep an eye out for that in the next couple of weeks. And as I said, $13.60 an ounce in US dollars is pretty much the line in the sand for the gold market. If we break above there, I think it's going to be a very good year for gold stocks. Thanks for watching. I'll see you again next week.